Hi, my name is Shreyans, and in this video, we are going to talk about an interesting company. It belongs to one of India's largest conglomerates. The conglomerate is present in like 22 industries, and this company is also an important part of it. Although the company is known by a few people, but not that well known in the industry, versus the industry leaders, obviously, but still, it's an interesting prospect. So before we start, please remember that this is not investment advice. We're just trying to understand the financial performance and position of the company. So let's get started. The company that I'm talking about is Tech Mahindra. Right now, Mahindra is obviously one of India's largest industrial and corporate groups. It has presence across so many industries. The tractors are so famous, and in fact, there are so many businesses that you would find out if you go to the Mahindra website, right? So Tech Mahindra is an IT services and business processing outsourcing company. It provides technology related services to other business and also creates products and platforms for other business, for their technological or network based users, right? First, let's start with the financials of the company. Then we look at the metrics and we'll wrap up with the highlights. So if you look at the revenue, EBIT and PAT, so overall, if you look at them, then you'll see, oh, this is amazing, right? That 7.2 revenue is up 7.2, up to 7.2 times, EBIT is up to 4.7 times, and PAT is up to 5.4 times. But if you look carefully, then there has been 1 year where a lot of growth has happened. So in FY14, the revenue increased by what, almost or increased by 174%. EBIT increased by almost 200%, and PAT increased by almost 280%. So this 1 year seems to be the year where a very major expansion happened for the company. Either they might have acquired another company, or they might have gotten several very huge contracts or something like that. But this is where the company really took off, kind of. And after that, if you look from FY14 to FY20, so the revenue has sort of doubled, slightly lower than doubled, and the EBIT and PAT are sort of flat. So if you look at the EBIT and PAT, here they were 3,200 crores and here 3,000 crores, right? And here it's about 4,000 crores, slightly over 4,000 crores. So about a 33% growth in what, 6 to 7 years, right? And so that is sort of speaking about the company's inconsistency, which we'll also see as we move forward, right? Now, talking about the cash flow. So if you look at the cash flow from operations, it's almost equivalent to the PAT. So on the cash conversion side, the company has been doing well. And the growth in CFO also has been very strong. So the growth in CFO is sort of more consistent than the growth in EBIT and PAT in that sense, right? Which is slightly surprising. Now, if we talk about the cash flow from investing and cash flow from financing, so investing, obviously there have been inflows and outflows. The company has regularly invested into its fixed assets, but apart from that, like most of the IT companies, it has also had significant investment related transactions, so buying and purchasing of investments with the excess cash that the company generates, right? Now, cash flow from financing is also very interesting because it talks about sort of maturity on part of the company, because the company has had a lot of borrowing related transactions, issuing borrowings and repaying borrowings in almost all of the years, right? But in the recent years, the company has also started paying good amounts of dividends and regular dividends. So in the initial 3 to 4 years, probably in these 4 years, the dividends were quite low, but in these years, the company has slowly increased dividends, and in the recent years also, the dividends have been quite a lot from the company. So in the recent years, the dividend payout has been very good, right? Now, talking about the equity is up almost 7 times, so that is there on part of the company. So that is good. This is understandable. Current assets have also rapidly grown. So current assets are up 11.4 times, and if you look here, then again this was one very large increase in this year, and after that, a steady increase, and then every year after year, the company has been generating a lot of cash, and a lot of investments would also be there in the current assets. Non-current assets as well, the company has been continuously and consistently reinvesting into its business, right? The non-current assets are up 3.4x versus a very massive increase in revenue, right? Current liabilities have also grown pretty much in line with revenue, right? This is something that is more or less expected from the company, and that is how it's been going, although it has been slightly more volatile for obvious reasons, right? Non-current liabilities as well, non-current liabilities are not that significant, right? If you look at the not total non-current liabilities, they're around 21-2200 crores, and equity is around 23,000 crores. So it's very comfortable from a solvency point of view as well. So if you look at the current assets are around 23,000 crores, right? And the total liabilities are around 13,000 crores. So, I mean, this is also something that's typical of the IT industry, right? Okay, now let's look at the growth, and we look at how the company's growth trend has been of high level financials. So if we just remove this 1 year here, right, because I mean, this seemed to be some sort of exceptional or extraordinary year for the company. But after that, there have been good and bad years, and there has been mixed growth, so to speak. So if you also look, I mean, the growth rate in revenue has been, low double digits, or, sort of mid single digits as well in the last 4 years. And the EBIT and PAT have also been inconsistent. So if you look at from here, or all the way up to here, so in the last 7 years, or in the last 6 years, the growth has been positive in few years and negative in few years. So here negative, positive, negative, positive. So that is something that's slightly inconsistent on part of the company. And as I was talking about here, the cash flow is actually surprisingly more consistent than the profit of the company, right? So whereas the profit and EBIT and PAT have gone down 4 times in the last 10 years, the PAT has, or the CFO has gone down only twice, right? So this is something that's very interesting, and that's not something you'd usually find. Decent growth in equity, that's understandable. Also, assets have also been growing, continuous reinvestments into assets, right? Current assets less current liabilities. Now, this is something that's more volatile, but also this is the important thing here is that current assets comfortably cover for the current liabilities, which we'll see as well. Liabilities as well, on an overall basis, liabilities not very significant, especially non-current liabilities are very low. So I mean, the growth here, it doesn't indicate much, to be honest, right? Talking about the metrics now. Now, return on capital and return on equity. This is also something that you'd see that the return ratios for this company are quite volatile and quite varied compared to other companies in the industry. So if you look at, the maximum has been 34% return on capital and 33% return on equity, right? But the minimum is 14.4% and 13.3%. So there has been a gap of good 20 percentage points, which is quite a lot, to be honest. And if you look at the ratios here, then I mean, in the 3 of the last 4 years, they've been slightly below median, and they seem to be stabilizing in this range in the last, 4 to 5 years. So that is something that we can understand from the return ratios. There has been quite volatility. So again, one exceptional year. If we remove the exceptional year, obviously, then we can understand that it has been operating in some sort of range, right? Now, talking about the EBIT and the PAT margins of the company. So if we talk about the EBIT and PAT margins, a sort of similar story that also goes around here. It has sort of stabilized these margins in the last 3 to 4 years, 4 to 5 years, and there were a couple of years when these margins were very strong. They are slightly more, they're slightly more stable than the return ratios, right? Talking about the capital and the asset utilization, capital and asset utilization has, sort of improved, especially that, at least the capital utilization, the asset utilization has been more or less stable in the last few years, right? Now, talking about the leverage and, solvency related and liquidity related perspectives. So assets by equity, it has never gone up, never gone more than 2x. So very comfortable on this end. Cash flow to PAT, again, if we look about it in a lot of years, so 1, 2, 3, 4, 5, 6 years, it has been greater than PAT, but on overall basis, it's almost equivalent. The cash flow is almost equivalent to PAT, right? Now, looking at the net cash flow position, so if you take a total of it, it's a positive, and this is something that we can understand that the companies in this industry do produce a lot of cash, which is enough to reinvest and to pay out dividends as well. Although there have been some borrowing transactions also for the company, but still very strong cash generation power of the company, right? Current assets less current liabilities. This is something that we've talked about, and again, a very solid increase here. And after that, sort of in the last 4 to 5 years, still it has been broadly been sort of maintained, right? So it seems that the company is sort of maturing in the last 4 to 5 years, and it will be interesting to see if it can be more consistent in terms of that, right? Non-current liabilities to equity. So if you look at non-current liabilities to equity, I mean, very insignificant non-current liabilities, so to speak, which is something that we've already seen. All right. So let's now quickly get started with the highlights of the company, right? All right. So what we've talked about is strong overall growth in revenue, but obviously a lot of it goes down to just 1 year, and decent but inconsistent growth in EBIT and PAT. In fact, rather it's more inconsistent because from FY14 to FY20, the growth in profits hasn't been that great, and it has been increasing 1 year, going down the next year, and like that. Right. Cash flow from investing includes continuous reinvestment into assets along with a lot of investment transactions as well. Cash flow from financing primarily includes borrowing transactions, a lot of borrowing transactions in all years, and dividend transactions. I mean, good dividends in the recent years, so to speak. Right? Strong growth in equity, negligible debt and liabilities on part of the company, at least negligible debt and liabilities are also comfortably covered by the current assets as well. Comfortable solvency position. Significant investments have been held as current assets by the company. Now, this is sort of not the best in the industry, which is the return ratio. So, return on capital, return on equity have been greater than 20% in only 4 of the last 10 years, and the trend is slightly inconsistent. But again, if we remove that one extraordinary year, then we can understand that it's more within a range, so to speak. But still, the return ratios have a lot of room for improvement, especially if we compare these numbers with the industry leaders or even the industry median, right? So EBIT and PAT margins have broadly compressed a bit, although again in the recent years they have been operating in a range. So that is something that we can understand. Capital turnover and asset turnover have broadly been maintained. I mean, slight improvement, but kind of operating in a similar range, right? Now, the understanding here, the conclusion here is that strong financial position and decent but inconsistent performance, so to speak, on part of the company. Although it does seem that the company is maturing, so it will be interesting to see that if the company can, maintain a stable growth rate or a stable performance, because that is something that seems to be lacking at this point from on part of the company, right? So that is all that I had to share about this particular company. I hope you found this helpful. If you have any questions, then you can drop them in the comments below and I'll get back to you very soon. If you found this helpful, please share it. If you want to receive more of investment research, then please subscribe, or you can subscribe to the channel and subscribe to the WhatsApp or the email list as well. Thank you so much for watching. I'll see you again with another company.